This is New Jersey Network. WNJB, Channel 58, New Brunswick. Viewer-supported public television.
New Jersey Business, the magazine of the New Jersey Business and Industry Association, is proud to dedicate its underwriting to the following NJN program.
The Nightly Business Report. Produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations nationwide. A.G. Edwards, investments since 1887. And by contributors to public television.
Good evening, everyone. Well, the bull was back on Wall Street today as the Dow soared past the 2,000 mark and then some, with a gain of more than 64 points. With the details, here's Paul.
Stock prices began the day on a firm note with the help of a steady U.S. dollar and carryover buying from yesterday's late rally, which took the Dow Industrial Average from a small mid-afternoon deficit to a rather impressive closing gain of nearly 17 points, just below the 2,000 level, which many traders viewed as a resistance area to further improvement. By 10 a.m. today, however, the Dow, with almost a 5.5-point gain, pushed up to the 2002 level and hung in there for the next hour until sellers finally appeared and sent the blue chip index back down to where it closed yesterday by 12 noon. Bullish traders were encouraged, though, after noticing selling pressures were very light, while the dollar surged sharply higher and bond prices rallied. This combination set off a flurry of buying in early afternoon, which enabled the Dow to charge easily through and above the 2,000 resistance level, and all this action set off a host of index-related buy programs as mid-afternoon trading progressed. By 3 p.m., the industrial average was up just over 35 points, with 10 stocks higher for every 4 lower. The rally accelerated sharply in the final hour, and with the added help of short covering and more futures-related buy programs, around 3:30, when the Dow was up 50 points, the big board requested member firms to refrain from using the automated order entry system. That slowed the rally briefly, but by the final bell, the Dow Industrial Average bounced back with a closing gain of 64.16 at 2,061.67. That's the best one-day gain since the first day of trading this year, when the Dow was up nearly 76.5 points. Theoretical high of the day, 2,067, and the low about 80 points under that. Trading volume today moved up sharply from yesterday's pace to nearly 190 million. Up volume just swamped down volume, 157 to about 20 million. The Dow Transport Index did very well with a gain of 17 1/3 points. Utility Index, a huge percentage move, up 3.20. The Dow 65 up nearly 20 1/4 points. And the closing tick, a pretty strong plus 552. Standard & Poor's 500 up nearly 7 points, a little better than an 8.5-point gain of the 400. The 100 up nearly 7 3/4 points. And the Commodity Research Bureau May Index was down 3/4 of 1 point. New York Stock Exchange Index up almost 3.5 points, a 4 1/3 point gain in the NASDAQ Index, and the value line up 3.03. The Wilshire 5000 rose about 55 2/3 points. The bond market began the day on a mixed note, somewhat on the defensive because of a high Fed funds rate. But the surge in the dollar on vague reports that the G7 nations would agree on a stronger than expected dollar-yen ratio. That was followed by an aggressive infusion of funds into the banking system by the Federal Reserve, and these two developments not only triggered fundamental buying, but also a flurry of short covering purchases, all of which lifted tax-frees to closing gains of around a 1/2 point, corporates to 1/4 point gains, while governments rose nearly a full point on the average as we see these long-term treasuries at 99 13/32. Now, we see the Shearson-Lehman Long Treasury Bond Index up just over 10 points. The Fed funds rate, as I said, was high at midday, 7 3/4, and finally settled at 7 1/4. However, this is sort of a weird Wednesday anyway. My street critique guest tonight is Mr. Larry Wachtel, the well-known market analyst for Prudential-based securities in New York City. In light of today's sharp move above the 2,000 level in the Dow Industrial Average, I asked Larry how significant this might be in restoring bullish confidence on Wall Street.
I don't see that much relevance in Dow 2000, having crossed and recrossed the Dow 2000 10 times. I do feel there's potency at Dow 2100. You notice every time we get above 2000, we fail and come down below it. So the critical level to me is not the 2000 level, it's the 2100 level.
Well, what seemed critical today was the renewed strength in the dollar on rumors, rather vague rumors, that the G7 nations are going to have a stronger dollar-yen relationship than expected. Is it that important?
Well, what it did, Paul, was set in motion the mechanical part of the market. That item sent shorts covering in the dollar. That sent shorts covering in the bonds. That created the future premium in the Chicago pits. That created the buy programs. And once that rumor got underway, the whole mechanical process took over and sent the market sharply higher.
Well, once the Dow got up 50 points, you know, the automated order entry system had to shut down because of the previous agreement. Member firms had to actually have their brokers walking on the floor. This may be a bullish development, but I'll bet you're going to have some sore calves out there tomorrow.
Yeah, they did it the old-fashioned way. They walked.
That's right. Do you think this rally would have been better if the automated order entry system hadn't been shut down?
I think it would have driven a little bit further, but on the other hand, when we have the down programs and the down days, it's nice to be contained in that 50-point level.
All right. Larry, is this a bull trap, this type of, you know, rally, the second best day of the year? Is this a bull trap?
I don't think it's sustainable. I think it was mechanical, and I think by 11 o'clock tomorrow, we'll probably be running out of gas. But I am bullish. I am bullish on the market. I just don't want to chase it. I like the dribbly days when nothing is happening and I can accumulate good blue chips at my leisure. I don't want to be chasing anything here.
You're not looking for, let's say, 23, 2400 anytime near term?
Not on this move, no. As I say, I think it's mechanical and it will run down.
You like those slow days when the bargains come to you?
That's it. The Dows, the Xeroxes, the USXs, I want to buy them by the bushel basket, but at my price.
Okay, very good. Larry, thanks very much.
Okay.
Larry Wachtel of Prudential Bates. That's the Wall Street Wrap-Up.
The takeover battle for Moore McCormick finally came to the end of the line today as Southdown succeeded in taking over the rival cement maker. Moore McCormick's board decided to stop fighting and accept Southdown's $40 a share bid after a federal judge blocked it from using a poison pill takeover defense. The combination of the Connecticut-based Moore McCormick and Houston-based Southdown will result in the nation's third largest cement producer.
And it appears another bitter takeover fight has drawn to a close as General Electric and Roper today signed a definitive $500 million merger agreement. Now, Roper had earlier accepted a $37.50 a share buyout bid from Whirlpool. But GE surprised Wall Street by outbidding its arch-rival in the major appliance business with a $45 a share offer to Roper. GE's bid, later sweetened to $54 a share, marked the first time the company had ever launched an unsolicited takeover attempt. On the precious metals markets today, prices continued to fall as the dollar continued to rise. On the New York currency markets, the dollar was up almost across the board, spurred by a Japanese news report that G7 ministers will set a 125 yen base for the dollar at their meeting next week in Washington. The Canadian dollar was alone in gaining ground against the greenback. And oil prices closed up 2 cents in New York, falling 15 cents in London.
October's stock market collapse seems to have had surprisingly little impact on America's biggest industrial companies, judging from the annual Fortune 500 survey released today. That survey found that as a group, the 500 largest firms turned in both record sales and earnings during 1987. Topping the magazine's 87 rankings measured in terms of total sales are General Motors, Exxon, Ford, IBM, and Mobil, all holding the same spots as they did a year ago. General Electric held on to the 6th place, but Texaco moved ahead of AT&T. DuPont remained 9th, and Chevron was bumped out of the 10th position by Chrysler. That marks the first time in a decade that Chrysler has made the top 10, and it accomplished that through its $1 billion acquisition of American Motors.
Number 23 on the Fortune list of retailing companies is McDonald's, the fast food giant. And McDonald's got a little bigger today with the opening of its 10,000th restaurant in Dale City, Virginia. The event came almost 33 years to the day that founder Ray Kroc opened the first McDonald's. And as Scott Gervey reports from Chicago, in that third of a century, the firm has single-handedly revolutionized the restaurant business.
The story of McDonald's is a story of numbers. The world's largest restaurant chain had 1986 sales of $12.4 billion. Its return on investment over the last 7 years has been over 20%. And over the same period, its stock has outperformed the S&P 500 by a 3-to-1 margin. But 10,000 restaurants, not even Ray Kroc, who opened his first McDonald's in Des Plaines, Illinois in 1955, forecast a number like that.
Ray was building the company back years ago. Somebody once asked him how large the company would be, and he said, well, maybe someday we'll have 1,000 restaurants in the United States.
2/3 of the restaurants are owned by franchisees, a number Quinlan expects to remain constant. In 1986, company-owned stores contributed 38% of earnings. After decades of burger wars, McDonald's is the undisputed leader, with 35% of the domestic market compared to 17% for Burger King and 10% each for Wendy's and Hardee's.
We have our own path that we're on. We're very optimistic about it, and I expect that, we'll just keep growing at an even more accelerated pace.
Analysts project McDonald's earnings growth at 15% for the years ahead.
Right now we feel it's very attractively priced, both on a near-term and a short-term basis. The company continues to have good prospects for strong earnings growth, high levels of profitability, and the future looks bright, I think.
McDonald's talks little about the competition. Asked about Burger King's latest commercials, which attack the nutritional value of McDonald's products, Quinlan says that strategy has been tried without success before. 27% of McDonald's revenue now comes from overseas, and its overseas growth rate exceeds the domestic growth rate. There are nearly 600 stores in Japan, more than 500 in Canada, and almost 250 each in West Germany and the United Kingdom. The company just opened its first restaurant in Yugoslavia.
You want to know what's different about the company? I think we're very true to our principles. We're a patient company. We like to do things well. We pay great attention to detail, and we try not to make big mistakes more than once.
It took 33 years to open 10,000 McDonald's. At the rate the company says it is now opening restaurants, 500 to 600 a year, the next 10,000 will take less than 20 years. In Chicago, Scott Gervey for the Nightly Business Report.
U.S. Trade Representative Clayton Yider today launched a sharp attack on European countries that are members of the Airbus consortium, accusing them of trying to divert attention from their subsidies to the aircraft maker. Airbus recently claimed that the U.S. government effectively subsidized Boeing and McDonnell Douglas through Pentagon and NASA contracts. But Yider said the amount of money American taxpayers spend in defense of the free world is not at issue, adding that the risk of a major trade war will increase until the European governments reduce their support of Airbus.
A warning that the nation's airports may not be growing fast enough to handle anticipated demand came today from the head of the Federal Aviation Administration. FAA Administrator Alan McCarter told the National Business Aircraft Association that unless existing airports are expanded or new airports are built, the result will be a shortage of airline flights and higher fares.
Without increasing airport capacity, we will be seeing increasing restraints on air transportation, and I'm concerned that we'll see a re-regulated system without even passing any legislation. Constraints will be our regulator.
McCarter added that without increased airport capacity, travelers will face increasing delays and airline profits will be squeezed. But he says it's up to local governments to make the needed airport improvements.
Turning to ground-based transportation, sales of domestically produced cars held their own in late March. Each of the big three U.S. automakers posted single-digit gains from levels of the same period last year, with Ford leading the pack on a better than 6% increase. Among the smaller automakers, Honda reports that sales of its U.S.-built models jumped more than 10.5%, while Nissan sales fell nearly 23%, and Volkswagen sales dropped an estimated 19%. For the month of March overall, sales of American-made cars rose 3.5% to an annual rate of 7.5 million vehicles. Paul?
Well, we had a high gear rally on Wall Street today as we review the closing figures. The second best gain of the year, up 64.16. That was only exceeded by a 76.5-point gain on the first trading day of the year, January 4th. Advances swamped decliners by nearly a 3-to-1 ratio. 18 new highs for the year, only 10 new lows. Topping the active list on 4.6 million shares, Harcourt Brace Yovanovich preferred stock, 9 7/8 up an eighth. Then American Telephone participating in the rally nicely, up 1.25, followed by Exxon with a 2-point gain. General Electric up 1 1/8. As you heard earlier, it's won the the bidding for Roper. Texaco did well, up 1 1/4 at 49. IBM participated in the rally, up 2 1/8. Ford Motor up 1 7/8, and a strong auto group on higher late March sales. American Express was up 3/4 of a point. Woolworth down 1 3/4. There were rumors early in the day that the Haft Investment Group had sold its position in Woolworth. That was later denied, but the stock's still down on profit taking. Verity, 10th in big board volume, showed no change at 3 1/4. Among widely held issues, Atlantic Richfield up 2 points. Some positive comments in the New York Times business section about it today. Digital Equipment and the strong high-tech group doing nicely, up 2 5/8. DuPont, a good gain of 3 5/8. General Motors up 3 1/8. Late March auto sales for GM up about 7%. And yesterday, Shearson Lehman Hutton increased its 88 earnings estimates for GM. Lone Star Industries up 1 1/2. Speculation on the street that Beazer PLC, the British company, may turn its sights on Lone Star if its buyout bid for Koppers company fails. Pillsbury down 1 7/8, little profit taking there after recent speculative run-up on takeover rumors. And York International up 2 3/8. The company is studying ways to enhance shareholder values. Fairchild Industries, the big percentage gainer of the day, up 1 3/4. The company predicting 88 earnings will be about 3.5 times better than last year's. Zenith Electronics up 1 5/8. Some analysts said the company may have a first quarter loss, but yesterday Oppenheimer recommended the stock as a buy. There's some speculation it may sell off its consumer electronics division. Alexander's Incorporated up 4 1/4. The news is that Interstate Properties and Donald Trump have increased their common stock position from 43 to 48.3%. RB Industries, which has furniture showrooms around the country, gaining 1 1/8. No news today, but earlier in the week, one of the company's directors increased its ownership of the common stock to about 34%. Tyco Laboratories up 1 5/8. Shearson Lehman Hutton reiterated a strong buy recommendation on Tyco today. DCNY Corp off 1 5/8. The company reported first quarter earnings down 50% from last year on lower revenues. Over in the American Exchange, a gain of just over 2.5 points in the index. Trading volume up better than 2 million shares from yesterday's. 3 stocks up versus 2 stocks down. Dome Petroleum led the active list on nearly 1 million shares, down a 16th. Wang B up 1/4. Lorimar Telepictures down 1/8, as was Atari, and Omdal up 1 3/8 in a strong high-tech sector. New Mexico and Arizona land in higher ground today, up 2 5/8, but no news from the company. Geothermal Resources dropped 2 points, big percentage drop. The company says it's going to have an 87 loss of around $4.5 million. NASDAQ trading a gain of 4 1/3 points in the index. Trading volume well up from yesterday's pace at 137.6 million shares. Advances led decliners by a 13-to-7 ratio, and the 100 index up nearly 7 1/2 points. A new issue today topped the active list on NASDAQ. U.S. West this is the New Vector Corporation. This is the cellular company, a spinoff from U.S. West. It was offered at $20 a share, 8.4 million shares, edged up 1/8. Farmers Group up 1 1/4, recommending shareholders reject Betis's $63 share buyout bid, says it has higher bids. Apple Computer doing well, up 2 1/2. Intel up 1 1/2. MCI Communications gained 5/8. Sun Microsystems down 1/2. Seagate gained 7/8. Lotus Development up 1 5/8. Microsoft and that strong high-tech group up 2 1/8. Telecommunications A was up 7/8 of a point. Symbiotics. Good gain of 1 point. The company is a genetic engineering firm, and it's in a pact with SmithKline Beckman. Autoclave Engineers up 1 1/2 points. Third quarter earnings sharply higher, 42 cents versus last year's 12 cents. And FileNet Corporation down 2 points. The company says it's going to have disappointing first quarter earnings due to order delays. And that's a Wall Street wrap-up, but a great day.
Certainly was. Well, Paul, Wall Street may have been smoking, but many of its workers weren't. That's because businesses in the financial district and elsewhere were affected by the start of a new anti-smoking law in New York City. New York correspondent Neil Cavuto reports the law is one of the strictest in the country.
If you were a smoker in New York City today, this is how you managed to get a few puffs outside your office, or if you were lucky, in a special smoking room set up by your employer.
It's inconvenient. You can't just sit at your desk and light a cigarette, you know, as you normally would do. And I've smoked 3 today when I would normally smoke about 10.
Starting today, New York City began restricting smoking in public places, like restaurants, business offices, convention halls, even sports arenas. As it is, nearly half the nation's states have smoking restrictions.
We like smokers. We just don't like smoking.
Dr. Curtis Wilbur of Johnson & Johnson says smiting smokers gets results. J&J conducted a 2-year study limiting smoking at its facilities. The result, fewer smokers.
We had eliminated almost 25% of the smokers. That is, those people stopped smoking in that 2-year time frame. Particularly important was the fact that these were the high-risk individuals, Neil, who had the highest likelihood of getting heart disease or cancer.
Just having a smoking policy can save a company a lot of money, up to $4,600 per worker per year in savings gained from insurance and health-related costs.
There is a reduction in property damage through burns and stains and all the like within the workplace, and that ultimately employees are healthier and that the insurance costs do go down somewhat.
As it is, Kramer severely limits smoking at his law firm.
We've chosen to have all of our secretarial bays smoke-free.
So you are going essentially one step further than the law.
That's right, and the law most certainly allows it.
But that could be a real problem for large restaurants, forced to have smoking and non-smoking sections, and companies with large open areas, where a lot of people have to work together. No matter, New York Mayor Ed Koch says companies should obey the law, whether smokers like it or not.
Smoking is a dirty, filthy, dangerous habit. And if you have children, you're going to leave them orphaned earlier than they would otherwise be if you continue with that dirty, filthy, dangerous habit.
I take it you don't approve of smoking.
I smoked up until 1952. Then I ended that dirty, dangerous, filthy habit.
Ever since the Surgeon General first pointed out the health hazards of smoking back in 1964, the number of smokers has drastically been reduced from about half the adult population to 1 in 4 adults today. Well, now smoking opponents hope to reduce that number further, and they insist that laws such as this one are a step in the right direction. In New York, Neil Cavuto for the Nightly Business Report.
Coming up, Adam Smith says the U.S. could learn a lesson from Japan on how to keep energy dollars at home.
With OPEC's pricing committee scheduled to meet this weekend in Vienna, one of its members is making a quick trip to Mexico in an attempt to win the support of that key independent oil producer. Saudi Arabian Oil Minister Hisham Nasser is due to arrive in Mexico City tonight, amid reports that the OPEC committee will recommend that all oil-producing nations cut production and exports by 10% to help sop up a worldwide oversupply of crude. A spokesman for the Mexican Energy Ministry says his nation is willing to go along with such a plan if other oil producers do the same.
OPEC's next regularly scheduled ministerial meeting is set for June, and the state of Texas may be represented at that gathering. OPEC President Ruano Lukman has extended an invitation to members of the Texas Railroad Commission, which oversees commerce in the Lone Star State. Lukman met earlier this week with Commission member Kent Hance to discuss ways of stabilizing the oil market, to which Texas contributes about 2 million barrels a day.
The Help Wanted Advertising Index, which measures the number of classified job ads in major newspapers, rose only slightly in February. The Conference Board, which compiles that index, says that decline, combined with expected growth in the labor force, could mean a rise in the unemployment rate. The biggest increase in job advertising occurred in Texas and Oklahoma, while the biggest drops were in Alabama, Tennessee, and Kentucky.
In tonight's commentary, author Adam Smith, host of the Adam Smith's Money World program, says the U.S. should follow the Japanese example in cutting energy imports.
Every day, the stock and bond markets follow the bounces of the dollar. The dollar itself follows the trade figures. If you look at the trade figures, very roughly a third of our trading deficit can be ascribed to cars, importing cars, a third to oil, and a third to everything else. We're always going to be an oil importer because we consume so much more than we produce. That isn't going to change no matter what the price of oil. The Japanese are far more energy dependent than we are, since they don't have any oil, and in fact they import 83% of their energy, and yet Japan may end up being more independent than we are. Japan has an energy policy designed to reduce the oil use by its electrical power industry from 35% to 13% in the year 2000. The famous MITI, the Japanese Ministry of Trade and Industry, spent over $800 million in energy research last year. Japanese industry itself spent over $4 billion. Less oil in Japan means more nuclear and more alternative energy sources. Nuclear is still a dirty word here since 3 Mile Island. No new plants have been started, and 70 have been canceled. Not many politicians can stand up to the people who object and lie down in front of the nuclear plants, but we need to take another look at this. It isn't that the world is going to run out of oil. It's that we can't afford the pressure on the dollar that comes from continuously shipping dollars out to pay for energy. We need to have a competitive energy business with all kinds of energy, not just so we can have red, white, and blue independence, but to help stem the flow of dollars out, and that is a real threat to our financial security. I'm Adam Smith.
Recapping tonight's top stories, the bull returns to Wall Street as the Dow Industrial Average soars just over 64 points to close at 2,061.67.
Two major takeover battles apparently reached the end of the line as Moore McCormick agrees to merge into Southdown and Roper signs a definitive merger agreement with GE.
Looking ahead to tomorrow, we'll report on Texaco's emergence from Chapter 11 bankruptcy. And now with tonight's last word, here's Paul.
President Reagan may go down in history as the Teflon president, a phrase coined by Representative Pat Schroeder to describe his unique ability to keep messy situations from sticking to his reputation. But we shouldn't forget that Teflon itself is quite a unique substance, and it's 50 years old today. The slippery material didn't enter the commercial marketplace until the 1950s, and since then, 500 million pots and pans coated with Teflon have been sold. But Teflon also has been used in everything from electronics to space equipment, and its inventor, Roy Plunkett, says he's been able to take pride in its many uses over the years. I don't know if it's true, but someone told me that Teflon was so successful, Velcro had to be invented to counteract it.
Well, that story confirms your smooth talking ability. That's it for this edition of the Nightly Business Report for Wednesday, April 6th.
For Linda, for Paul, and for all of us at the Nightly Business Report, good night.
The Nightly Business Report is made possible by A.G. Edwards, providing financial services through more than 340 locations coast to coast. A.G. Edwards, a century-old tradition of putting the customer first. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody. By Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. And by contributors to public television. Reuters, the world's largest electronic publisher, provides the Nightly Business Report with news, market data, and communication services worldwide. For a transcript of this program, please send $4, check or money order, to NBR Transcripts, P.O. Box 12724, Overland Park, Kansas 66212.